May profits be upon you. Welcome to another weekly Forex forecast. You are trading with RT Money, and I'm very happy to have you with me today. Thank you for watching my video. We got a great week coming up. Why do I say it's great? Because we're going to have a lot of volatility, lots of red folders uh, for the week ahead. Monday, nothing especially earth shattering here, but we got enough red folders to where we'll have some good volatility, and that's going to be a good trading day. Excuse me. On Tuesday, though, we have the Aussie. Aussie is very busy. Interest rate decision and a CPI report for the Aussie. So that's something you want to watch. Also, the Bank of Japan got some. The governor wants to talk about their policies, the currency policy, and you know uh, that's something that you want to pay attention to because the JPY just had a relief rally and all. I mean, we're going to see. We're going to see. We'll take a look at it. And Wednesday, I have nothing red folder, but Thursday, uh, that's interesting about Wednesday. Thursday, we have the Swiss getting busy with a interest rate decision on Thursday, and somebody else. Yeah, Fed, Fed Chair Powell. He's going to be speaking on Thursday. Something we want to pay attention to. Okay, and we got core PCE on Friday for the U.S. dollar. This is a good week. This is a good week. This is the kind of week that whatever you lost last week, you can make it up this week. I'm telling you, this is going to be a good week, man. Just pay attention to it, and don't jump into anything. Okay, just don't jump. All right, just be cool. That's all I'm saying. Now let's take a look at the S&P. We're going to start with the weekly. Okay, the S&P futures, and we're going to look at the weekly, and you can see with this line here that this past week we took out the high. We took out the high, and we have an all-time high here, a new all-time high. All right, and you can see with this very bearish candle and this bullish candle that cleaned up, that actually corrected this move. What you want to notice is this was a bullish fair value gap here. All right, and you would have failed. I mean, you would have thought that it was going to fail. You would think that, oh, it's what do you call it? Filled the bullish fair value gap, and it's probably things are looking bearish now. No, no, no. You wait until you see a candle body close below or above these fair value gaps in order to say that it was disrespected. This was respected. This bullish fair value gap was respected with a sharp turn. All right, and you can see that the this candle and the follow up candle the next week traded through that high. All right, creating what an area of fair value, and this is a bullish order block, folks. That's what this is. Now, what do I expect from here? I expect a pullback. After taking out a high, you expect some kind of retracement. I'm looking for that retracement to the breakout area. That's the way it works, folks. I'm looking for a breakout area here, and I'm looking to take another buy here. All right, because we're in a bullish market. I'm looking to take another buy when it pulls back. All right, let's go to the daily. All right, you can see clearly this is the area of fair value. Okay, that's the one I was referring to. All right, and price likes to come back to that area of fair value and then uh, use it as a structural point to continue higher. Okay, this is a breakout, folks. We're not breakout traders. We just there's no reason to come back in. There's no reason for price to continue down when it's already an area of fair value. It comes back to offer that fair value, boom, and then it can mitigate that area and continue higher. Now, we can get rid of this because it's not relevant anymore. All right. Should price come back down to this fair value gap? There's a thin one here, right here. What I need to do is bring you closer. All right. You see that thin one I have highlighted. Wow, what's going on with my mouse? All right. You see the thin one I have highlighted here. Do I expect price to come all the way down there? I don't have an expectation whatsoever, because when you have expectations, you leave yourself open to disappointments. All right. I play the markets as it presents itself. All right. If there's an opportunity, I'll take it. If price comes down here and decides to start doing the little dance, all right, I'm going to be the dancing partner, and I'm waiting for price to move up. That's what I'm looking for. All right, doesn't it? Probably not going to come that high. All right, but this is the move I'm looking for. If it comes down to, wow, what's going on with this thing? If it comes down to this fair value gap or this one, I'm looking for price to react to it. All right, I'm looking for price to react to it. You can react here, you can react here. It doesn't necessarily have to come down to this one, but there's liquidity under these lows. There's no bullish fair value gap up here. So I'm looking for structure at this point. And you see how price pushed down into here and then rejected? Why do you think it did that? Hmm? Give me an answer in the comment section. Why do you think it did that? All right. I'm going to give you the answer right now. All right. But I want you to give an answer before you know, look at mine. All right. I think it's because price ran into a bullish fair value gap, rejected, reacted to it, and is going to continue higher. Let's take a look. All right. Look at that line. All right. We're going to 4 hours. And what do we see here? All right. Here's the reaction point. Boop. Do you see what I see? Now, there's a reason why I drew your attention to this thing. All right, there's a bullish fair value gap there, and you see how it closed here, opened, closed, came down it back into it, and closed higher. Why? Because there's another bullish fair value gap here as well. All right. Just because price wicks through that fair value gap doesn't mean that this fair value gap was disrespected and that this one was respected. No. See where the close and open is, where the close and the open is, open and the close. All right. You can see that it was respected. If it was a candle body close down below this thing, that's when it's disrespected. I need you to see that. All right. This one was well respected. It was very sensitive. Price was very sensitive to it. You can see that we have between the two of them bullish structure to signal that price wants to go higher. That's my point here, and that's what you need to recognize. All right, that's what you're looking for. Bullish order flow is signified by bullish fair value gaps. Okay, easy enough. All right, so I'm looking for higher prices here. I'm looking for price to come back and touch, and on Monday and Tuesday, quite possibly coming down and then going further, then coming up. I'm not looking for a full pullback down to these easy, low liquidity, low resistance liquidity here. I'm looking for price to, if it does come down there, I'm looking for price to take a buy here or here. I'm going to be looking hard at these two areas for a bullish setup. All right, I'm looking for a bullish entry function on these levels. That's what I'm looking for. My mouse is sticky. I don't know what's going on with it. Okay, but it's just pausing at odd places. I don't know what's going on. And then everything's all right now. Okay, so we go to NQ. All right, we're going to NASDAQ. We have a similar situation, of course, because they tend to run, they correlate positively, right? You can see on the weekly that we did not reach that all-time high. All right, price struggled to get higher. I don't know why it's the Nasdaq is running a little weaker than the S&P as of late, but it is. All right, and you can see that price did in fact go into that bullish fair value gap, closed, and still turned around. Look at that. All right, look at that. That's pretty amazing. That's why you tend to watch for SMTs. All right, the what is that? Smart money technique. You look for SMTs between, divergence between the Nasdaq and the S&P, and let that help to guide you. All right, look at this wick. There are on the lower time frames, the daily and the weekly, there's a bunch of bullish fair value gaps that that will help form this bullish wick. That's why price pushed up, and when price pushes down below that that open and comes back into this wick, that's why you'll see stuff like this, a strong turn. This bullish fair value gap is not as relevant in this in that context. Do you understand what I'm trying to say? So as price moves bullishly up and you see that price takes out the previous week before it and closes above that high, you can kind of think you're allowed to think that price is probably aiming to take out the swing high. And that is why I have those dollar signs there for liquidity, and I'm looking for price to continue higher from there. If we go to the daily, you can see that there are no bullish fair value gaps here. All right, just like in the S&P, but you do have a fair value gap here, and you see that price has been playing this fair value gap. Oh, here it is, right? And it never disrespected that fair value gap. Price held here. It was resilient. All right. Should price come back to it? I don't hold. It's been tested too many times for me to hold. You know, the the depend on it. All right. I'm looking for price not to go past this area here. All right. Why? Because this is the breakout area. All right. This is the breakout area, and you see that price traded through the previous the previous daily candle, and closed strong. All right, we took out some highs over here, but we had a small pullback, and you see the rejection from it. I'm looking for price to continue higher. Okay, just using uh, the proximity to that swing high. We are at the objective, all right, that it did not accomplish last week. I believe it will accomplish it this week. So that's what I'm looking for. Okay. Uh, I'm not really interested in sells in the indices this week coming, uh, unless, the market uh, tells me something different. All right. If we go to the Dow, you can see that price has pushed down into this bullish fair value gap here. All right, just like in the other indices. Nice sharp turnaround, all-time highs. All right, and I mean, and we have uh, well, let me go to the next. Let me go to the next one before I get ahead of myself. All right, we can get rid of this. All right, now in again is in this formation here, just like in the other two indices, you don't see any bullish fair value gaps, but you do see an inside bar, just like the other ones, right? And we are near the all-time high here, and price has not come down. Why hasn't price come down? Why did it form this inside bar? All right, if price pulls back and takes out this swing low, just like in the NASDAQ, just like in uh, the S&P, I'm looking for price to come down to this bullish fair value gap, give us a high probability trade to the upside. Okay, you're gonna embarrass me in front of the company. All right, I'm looking for price. Okay, again, all right, I'm looking for why? Why won't you? I'm looking for price to come back down here and then continue higher. That's what I'm looking for. Should price, I don't see a good reason to take a short from here down to here. That I think that because it's counter trend and it would be a bit risky for me and my style of trading. But if price starts to come down here and shows bearish fair value gaps, uh, I'm going to wait until it gets to this bullish fair value gap and give me a good bullish setup, because I think there'll be a high probability long from this area, because we just took out a swing high. All right, you got to expect some kind of pullback. I don't want to get involved in choppiness of a pullback. All right, if it pulls back here, fine. And then I can take another long from here. That's what I'm going to do. All right. If we go to gold, all right, gold is pretty simple. All right. We don't have to go get too elaborate here. We hit the bullish fair value gap after trading through the old high over here, trading through it, pulling back into it, the breakout area, just like I've been trying to outline with the indices. And we have two candles that push and expand past the high, past that Wednesday high. All right, that was the uh, FOMC high, right? And I'm looking for price to do what? To pull back. To pull back to what? Right around here. All right. No lower than that because this is the breakout area, right? All right. We have opposing candles going the other way. I'm looking for price to maybe come back down and then continue higher. And why is this blue just sitting out here for no reason? Well, I'm looking for price to form a bullish fair value gap. If price forms that bullish fair value gap, I'm looking for price to pull back into that fair value gap and then continue higher. All right. So this moves up. This moves up to here. All right, where this market structure point here, this high is intersects that bullish fair value gap like this one is doing. All right, that's when I get the two things happening, that's a bullish confluence for me. Okay, so that's what I'm looking for in gold. Okay, I'm looking for price to continue higher. I'm looking for uh, some more buys there. Silver, same way. You see how price pulled past the swing high, came back down into the bullish fair value gap, bounced, gave us two good candles to the upside. Do you think we're heading towards the next swing high up here as a goal, as a a target? Yes, I do. I do believe that price is going to come up there. All right. We haven't left any bullish fair value gaps. If price extends past this high with a candle body close above it Monday or Tuesday, guaranteed we're going to hit this high and quite possibly the next high above it. All right. Should price push back down, I don't want to see it go past I don't like using fair value gaps that have already been used. But if that's why I'm hoping that we create one along the way up here, a bullish fair value gap. But if price comes back down to this, I'm going to give it a 50-50 chance that right around the middle point of this fair value gap that we will find support and continue higher. Yeah, but it's longs all the way, longs all the way. Oil, U.S. oil. Thank you. All right. Price has found its way into a bearish fair value gap here. All right. After breaking uh, this bearish structure here, taking that liquidity, boom, we went past it. Now we're pulling up. We took that one as well. These are important lows. There was a lot of liquidity under these lows, and price swept it all. Boom. Right. And now we get the retracement. And I said it last week. I'm waiting for price to come back to this bearish fair value gap. Now that we've reached it, I'm looking for price to turn over. I'm looking for price to turn over and continue down because in the big scheme of things, it looks like we are on a bearish trajectory. It's that simple. So I'm looking for price to turn around in this bearish fair value gap. It's not that hard. Not that hard for me anyway. And we have the confluence of that swing low to be intersecting with that bearish fair value gap. Right? That's it. And we look at UK oil, we have the exact same thing. There you go. Uh, uh, we have that structure point. We have the same low. We have price pushing down, sweeping all of this good, juicy liquidity, reaching up to the bearish fair value gap. I'm looking for it to turn over. And that's it. Folks, make sure you check the comment section of this video for updates throughout the week. I'm always throwing them in. If you have a question or comment, leave a comment, leave a like if you like the video. And I'm letting you know that I appreciate it. Just let me know that you're picking up what I'm putting down. All right. May profits be upon you. Take care.